A revaluation reserve is a specific part of a company's balance sheet used to record changes in the value of long-term assets. Think of it as a holding tank for gains that have not actually been turned into cash yet. Because these gains are unrealized, they do not show up on the income statement as traditional business profit. This reserve keeps the balance sheet accurate without inflating the cash available to pay out to shareholders. While both appear in equity, a revaluation reserve is tied to asset prices, whereas retained earnings come from daily operations. When an asset is revalued upward, the difference is parked here, keeping the accounting equation in balance. Remember that this number represents the potential value of your assets, not money sitting in the bank. Understanding these reserves helps you read a balance sheet more effectively. Thanks for watching, and stay tuned for more finance basics.